formed the bedrock of William Delbert Gann's legendary approach to market analysis and prediction. A figure shrouded in both admiration and controversy, Gann dedicated his life to uncovering the hidden order within market fluctuations, believing that geometry held the key to unlocking future price movements. This video script will delve into the core tenets of Gann's secret mathematics, illuminating how specific geometric tools were meticulously employed to forecast the market's trajectory, offering a unique perspective on understanding financial dynamics. William Gann firmly believed that markets were not isolated entities, but rather microcosms reflecting universal natural laws, cycles, and geometric patterns evident throughout the cosmos. He posited that the same harmonious relationships found in nature, from planetary orbits to the growth of a seashell, also manifested in the seemingly unpredictable realm of stock prices and commodity values. This fundamental philosophy underpinned his entire methodology, suggesting that by understanding these underlying universal principles, one could gain profound insights into market behavior. For Gann, the market was a living, breathing organism, subject to the same rhythmic ebb and flow as everything else in the universe, and he sought to quantify and visualize these rhythms. Central to Gann's mathematical framework was the inseparable connection between price and time. He asserted that these two dimensions were intrinsically linked, moving in a harmonious tandem that formed predictable patterns. While most conventional market analyses often treat price and time as separate variables, Gann saw them as two sides of the same coin, constantly interacting and influencing each other. He believed that significant market events, such as major tops or bottoms, occurred when specific price levels aligned with particular time cycles, creating powerful junctures of reversal or acceleration. This concept of price and time existing in a state of equilibrium or imbalance was critical to his predictive models. Geometry, in Gann's view, was not merely a tool for measurement, but the very language of the market itself. He contended that geometric forms, angles, and ratios provided the blueprint for market dynamics, revealing underlying structures that were otherwise invisible to the untrained eye. From the simple line to complex squares and circles, these shapes were not arbitrary, but represented fundamental relationships between price and time. By plotting these geometric constructs directly onto market charts, Gann aimed to visualize the market's internal architecture, allowing him to identify points of support, resistance, and potential trend reversals with remarkable precision. The elegance and universality of geometry made it the perfect medium for expressing the market's natural order. Among the most renowned of Gann's geometric instruments are the Gann angles, a series of diagonal lines drawn directly onto price charts. These lines are not arbitrary. They are meticulously constructed from significant swing points, such as major market tops or bottoms, and they establish a fixed, predetermined relationship between price movement and the passage of time. Each Gann angle represents a specific rate of change, illustrating how quickly price is advancing or declining relative to time. The foundational premise is that when price moves at a consistent rate, it tends to follow these angular lines, which then act as powerful levels of support or resistance. The most crucial of all Gann angles is the 1 by 1 angle, commonly corresponding to 45 degrees on a properly scaled chart. This particular angle symbolizes an ideal state of balance and equilibrium, where one unit of price moves in perfect harmony with one unit of time. When a market is trading along its 1 by 1 angle, it signifies a strong and sustainable trend, indicating that the forces of supply and demand are in perfect balance. A break below an ascending 1 by 1 angle often signals a weakening uptrend, while a break above a descending 1 by 1 angle suggests a strengthening downtrend. The 1 by 1 angle serves as the primary benchmark for assessing trend health and potential shifts. Beyond the fundamental 1 by 1 angle, Gann also utilized a series of other important angles, each representing a different speed or slope of price movement relative to time. For instance, the 1 by 2 angle indicates that price is moving twice as fast as time, suggesting a very strong and aggressive trend. Conversely, the 2 by 1 angle implies that time is passing twice as fast as price is moving, often indicative of a slower, more gradual trend or a market consolidating before its next significant move. Other angles, such as 1 by 4, 4 by 1, 1 by 8, and 8 by 1, further delineate various degrees of market acceleration or deceleration, providing a comprehensive framework for understanding the velocity of price change. The primary function of Gann angles in market prediction is multifaceted. They are effectively used to identify key levels of support and resistance, as price often respects these diagonal lines, bouncing off them or struggling to penetrate them. When a price trend breaks through a specific Gann angle, it typically signals a shift in the market's underlying momentum, indicating a potential acceleration or deceleration of the current trend or even a complete reversal. Traders carefully observe these interactions to gauge the strength of a trend and anticipate future movements. Moreover, the intersection points of various Gann angles can highlight critical junctures where multiple time and price relationships converge, often preceding significant market turning points. Another cornerstone of Gann's secret mathematics is the concept of Gann squares, often referred to as the square of 9 or the Gann wheel. This sophisticated numerical grid or spiral template organizes numbers in a specific geometric arrangement to reveal profound mathematical and geometric relationships between price and time. Unlike standard charts, the square of 9 is not directly plotted on a price graph, but serves as a standalone analytical tool, often printed on paper or accessed through specialized software. Its construction is based on a spiraling sequence of numbers starting from a central point and expanding outwards, which allows for the identification of cyclical patterns and potential turning points. The mechanism of constructing the square of 9 involves placing the number 1 at the center of a grid, then spiraling outwards in a clockwise or counterclockwise direction, filling in consecutive numbers. For example, the numbers might spiral outwards, completing a square with each rotation. What makes this arrangement powerful are the specific diagonal and cardinal, horizontal and vertical lines that emerge from this spiral. These lines connect numbers that are mathematically related, and Gann believed these relationships corresponded to important price and time levels in the market. For instance, numbers along the same diagonal or cardinal line often represent significant support, resistance, or potential reversal points. The predictive functions of the square of 9 are extensive. By identifying a significant market high or low and locating that price level on the square of 9, traders can then look at the numbers situated along the key diagonal and cardinal lines originating from that point. These numbers are interpreted as potential future levels of support and resistance, indicating where the market might find buyers or sellers. Furthermore, the square of 9 is exceptionally powerful in determining time cycles. By identifying a significant past market turning point and its corresponding number on the square, traders can then count forward in time using the rotation of the square to pinpoint future dates or time zones where another significant market reversal is likely to occur. This unique blend of price and time analysis makes it a potent predictive instrument. In addition to angles and squares, Gann also incorporated other geometric figures into his analytical framework, albeit with less prominence than his primary tools. He frequently utilized circles and triangles to identify cyclical patterns, zones of market balance, and to anticipate changes in the prevailing trend. Circles, for instance, could be drawn on charts to represent specific time cycles, with their circumference delineating periods of potential market turning points. Triangles, often formed by connecting multiple price points, were used to identify consolidation patterns or areas where price was converging, signaling an impending breakout or breakdown. These additional geometric forms provided supplementary confirmation for the signals generated by his more complex instruments. To understand the profound implications of Gann's geometry, one must grasp his pivotal concept of squaring price and time. This is not a literal squaring of numbers, but a mathematical technique and philosophical principle that suggests significant changes in market trend occur when price and time achieve a state of equilibrium or square with each other. In essence, it means that a specific number of price units has moved in a particular number of time units, creating a perfect balance. For example, if a market moves up 20 points in 20 days, it has squared price and time. Gann believed that these moments of perfect balance, or when price and time align in specific geometric ratios, often precede major market reversals or accelerations. This method is fundamental for identifying precise temporal zones for market turning points. Interpreting the signals generated by Gann's geometric tools requires careful observation and a deep understanding of his principles. For instance, if a market price breaks decisively through a key Gann angle, especially the 1 by 1 angle, it is interpreted as a strong signal that the existing trend is weakening and a potential reversal or significant acceleration in the opposite direction is imminent. Similarly, when the price reaches a level identified by a diagonal or cardinal line on the square of 9, it suggests that the market has hit a crucial pivot point and a change in direction is highly probable. These geometric signals are not merely indicators, but are viewed as manifestations of the underlying natural order of the market. The efficacy of Gann's geometric instruments hinges critically on the correct scaling of market charts. Without proper scaling, where 1 unit of price accurately corresponds to 1 unit of time, the geometric relationships that Gann observed simply do not manifest correctly. For example, if a price chart is compressed or stretched disproportionately, a 45-degree angle might appear as something else, completely distorting the intended 1 by 1 relationship. Gann himself emphasized the paramount importance of creating square charts where the price and time axes are perfectly calibrated. This meticulous attention to chart presentation ensures that the geometric patterns and angles reveal their true predictive power, making accurate analysis possible. For any trader seeking to apply these advanced methods, a comprehensive and integrated approach is highly recommended, combining the insights derived from various geometric instruments, such as the precise trend identification offered by Gann angles, the cyclical predictions from Gann squares, and the supplementary confirmations from circles and triangles, can significantly enhance the accuracy and robustness of market analysis and forecasting. No single tool should be used in isolation. Rather, their combined application allows for a multi-layered understanding of market dynamics, providing a more holistic and reliable framework for making trading decisions. This synergy of tools helps to cross-validate signals and reduce false positives. Despite being developed in the early 20th century, the methods of William Gann retain remarkable relevance in modern trading. Active traders across a diverse range of financial markets, including stocks, commodities, currencies, and even cryptocurrencies, continue to employ Gann's principles to gain an edge. The underlying natural laws and psychological patterns that Gann identified are timeless, transcending specific market conditions or technological advancements. While the tools for drawing these geometries have evolved from paper charts to sophisticated software, the core principles of price-time relationships and geometric harmony remain as potent today as they were a century ago, proving the enduring power of his analytical framework. Exploring the intricate world of financial markets requires tools that offer genuine insight and a robust framework for understanding. This is precisely what William Gann's secret mathematics provides. His profound belief in the geometric order of the universe, mirrored in market movements, led to the development of powerful analytical instruments like Gann angles and the square of 9. These tools, when applied with precision and understanding, offer traders a unique lens through which to comprehend and anticipate market dynamics